Well, ABB India came up last week with a fantastic set of numbers, a 13% odd uptick in revenues. And even if some people thought that they might have been a bit disappointed, remember there was a deferment of 200 odd crores that the management said. But look at the operational performance, not just in quarter two, but the last 2 or 3 quarters. And as a result of which, a near 50% uptick in the bottom line. So we thought that after such a stupendous showing for the first couple of quarters of the current calendar, yes, why not travel to the Nelamangala campus of ABB, where you can be in touch with the management on the robotics shop floor and try and understand from ground zero about what's leading to this kind of performance and what could happen ahead over the course of the next couple of quarters, albeit the next couple of years. So in conversation with the man himself who is heading ABB India, MD and country head of ABB India, Sanjeev Sharma. Sanjeev, great being here. Thank you for having us.
Neeraj, welcome again. Good to have you here again.
Yeah, it's great to be here because we see the magic in the numbers, but it's great to be here to see the amazing array of manufacturing riches that you're producing out here. So just a brief, I mean, where is it that we are and what's the significance of this shop floor?
So as you know, in India, we have 25 factories. So we are in one of them, which is the robotics automation shop floor. And here you will see different solutions being configured by our teams, which will go to our customers.
Okay. I would love to know some details about some of these machines as well, but let's start with the numbers, Sanjeev. Fabulous numbers. I mean, once again, you've beaten estimates, most estimates if you will, and fairly positive commentary in the con call about what's led to this performance in the last 3 years and what could happen ahead. Take us through some of the highlights.
So if I always take a long view, and whatever numbers we are seeing today, they are in making for what we have been doing for last 3 to 5 years. So now you are getting the converging effect. So if you see our last 3 years performance, we have grown in orders 27% CAGR.
Yes.
In last 3 years. And then there's a build up in the revenues, and then we have a lot of productivity oriented initiatives which are happening across the businesses. We have 18 businesses, and those are also showing up into the profitability. A lot of localization, product portfolio expansion, the products which were not available in the country, they have been brought in because there is a demand for those new technology products. And again, the localization of it means more competitiveness in the marketplace, and you can see that shows up in the numbers, both in our ability to get more business as well as deliver them profitably.
Yeah, so I saw that you mentioned, that you could have done maybe a 200 crore number more had it not been for the deferment, etc. How strong is the current calendar looking for ABB India, both in terms of the execution that you do for Indian clients as well as export clients, particularly India, considering that we are past the election season and whatever slowdown or deferment of orders or no executive decisions being taken thus far is now a thing of the past.
So we have our backlog is 23% more compared to same period last year. So that means our books are strong, and 200 crores that we talked about, that is basically customers were kind of delaying it. They were delaying it for a couple of months. So that's a temporary, and that comes into this quarter. But as we see, we have about 9,700 crores of backlog, and that will go into execution in coming months. And that comes across all the segments, across different businesses. So it gives a fairly homogeneous and harmonious effect to our books and as we execute it. And the gross margins in these orders are steady, and our teams are executing well at this point.
Yeah, but in some of the conversations that we've had, as well as you may have had with others as well, plus in your annual report, right, you highlighted that the growth strategy was to keep targeting high growth profitable markets and the high growth profitable areas as well. So markets plus the products, etc. You guys have this technological advantage, a moat around all of that. So is the growth coming in from that bucket of products and markets, and is the remainder which could come in from not necessarily the high growth areas but the areas which have not grown thus far, or the markets yet to come in?
I think we have spoken about it earlier as well, but I'll just like to reformulate. So what's happening in the market is there is a fundamental shift in Indian market. So one is that post-COVID, appreciation of good technology, reliable technology, companies which can deliver technology which gives a higher availability of equipment, easy to maintain and easy to service by the local networks. I think that is appreciated by the customer.
Why so? Why post-COVID?
Because during COVID, people really underwent stress, wherein when they wanted support and when all the factories and the locations were closed, there were only few companies which could stand by them to run their operations, etc. So that's the time. I think there is a now differentiation between cheap technology and the high quality global technology. So there's a marked shift into the customer selectivity process. So that's number one. Number two, since 2016 and 17, new market segments are opening up in the country. Like say, earlier we used to serve about 7-8 segments. Now I think it is broadened to about 23 market segments. Like for example, data centers. India used to be served by data centers sitting in Singapore or somewhere else, but now with the policy change as well as the data consumption that we have and the latency that you require for financial services, etc., now it is kind of a long runway wherein a lot of data center capacity will be built into the country. And that's where our portfolio is at sweet spot, and we see a very large kick up there, and every quarter we are seeing very good inflows coming out of these new market segments, which were, say, almost nothing 4, 5, 6 years ago. Same thing goes for electronics manufacturing. We also look into other segments like renewables, which of course were nascent at the 10 years back, but now they are matured and they have a strong demand. And the traditional market segments like say chemical oil and gas distribution, mining, minerals, they also have kicked up, and our portfolio finds good inroads into these market segments as well. And since the power demand is increasing and the cities now are used to live without power cuts. So they want, the administration wants to deliver stable power. So the distribution solutions that we have, which forms the core of power distribution in the cities and the industry, that also has a good demand. So that is on a kind of a new set of mindset we see. Then the new trend which has come is that most of the large companies and medium-sized companies, one for the sustainability agenda, and also from the energy savings mindset, because energy saved is energy produced, and energy is a cost input to the industry. So they are buying more and more products which are energy efficient. So our motion portfolio really is in the sweet spot for energy efficient solutions. So that's the another kicker we have in the electrification than in the motion side. And again, as you see, that most of the industries in automotive change to EV. They're kicking up the volumes and they're kicking up the sophistication. So use of robotics in their shop floors, I think to do more precision manufacturing is also coming together. So I think these are the few of the new elements which I've added, which were not there a few years ago.
Is this use of robotics, by the way, I'd love the camera to pan there. Is this use of robotics per se, or is this very, very mid-level kind of?
So you may have heard about Industry 4.0. This represents Industry 5.0.
Okay.
So the difference is Industry 5.0 is that this is a cobot which can work together with the factory workers. So there can be certain applications wherein you have the line of workers and in between there are cobots who are sitting. So that's wherein you mix the automation with cobots and the workers, that's Industry 5.0. So this is one of the applications being developed by our team, which will most likely be used by one of our factories, wherein this cobot will be used, and they are now fine-tuning it.
Ah, okay. A new term that I learned, cobots. I didn't know about this at all. Okay, so coming back to ABB's performance, and in the con call, I believe you said that you saw some very large contracts in data centers which were not there in the past. You referred to it a little bit. I remember a conversation last year wherein you spoke about how data centers, green energy, all of that is picking up. We see if the targets set up by the government of India for energy setup through all forms of energy, whether thermal or renewable, are very, very stiff. Does this mean that you are in a sweet spot, not just for what's happening currently in 2024 and 25, but presumably till the end of the decade?
Well, I can, you need to have a reference point when you talk about future, right? True. So it's very easy to see Indian market and do a projection, but I had a lot of exposure when China was developing. And I would say India is where, maybe I'm allowed to say that, maybe 20 years behind where China was. And you could see that the similar kind of kick-up and kind of growth was being experienced by us with our portfolio in China. And it really grew. And on a relative basis, I see India is at the starting point. So I see at least 5 to 10 years, the kind of a runway ahead of us, wherein similar kind of a growth can continue, unless there is something which happens in the policy or in the economic environment which is beyond our control. So I think the way the overall disposition of the industry is, how they are planning for future, the capacity is being done, and also a lot of import substitution is being carried out, which means the machines which used to come as fully imported, now they're being assembled here. So that means the components for those are being built here. More value added is being carried out here. And a lot of competence is getting built into the in the country. So you will see as we grow as an economy, and as well as we do a lot of local value add, I see at least for our portfolio in electrification, motion, process automation, as well as in the robotics automation, I think we have quite a journey to perform. And especially in the process automation, you mentioned the energy equation in India is very important. And I think whole world is grappling with it. India even more so, because we want to be less dependent on imported fossil fuels. So I think this energy equation will continue to evolve, and the existing players and new players are coming who want to scale up in that area.
Right.
So recently we secured some contracts in the hydrogen production side, wherein we are supplying some switchgear, and also we are seeing some other areas in the mobility wherein scaling up is taking place and we get the effect out of it.
Wow. So Sanjeev, two questions roll into one. One is a 5-10 year roadmap, and usually cycles become self-fulfilling, right? So if you indeed have a strong cycle for 5 to 10 years, then it doesn't mean that the cycle is only that long. After that, the cycle may well continue. You are right now talking about 5-10 years, so that is one. Could that happen? That could continue beyond 10 years? One. And part two of my question, is this answer for the India market, or when you are looking at this strength, you're also thinking of what ABB India could do for the rest of the world, because your export portfolio, I believe, is also growing?
So we grew last quarter 39% for our export orders. So as I said, we have 18 divisions, and most of our shop floors are world class. I think we really are not looking at only the labor arbitrage, we are looking at the productivity arbitrage to go along with it. So we are using best of the technologies when we are setting them up. So that means once we have sophisticated, very predictable, kind of a quality of the products, these shop floors become very attractive for our global managers to use these shop floors to deliver to other markets. And we are seeing that. We are getting more and more allocations to our businesses to not only serve India, but serve outside market. But our primary focus is India, because as a multinational corporation, very reason we are present in India is for India. But we will leverage the supply chain base here, and also we will also leverage the opportunities our global team leaders want to serve out of India.
I had the pleasure of speaking to Peter Voser in Davos earlier this year, and the bullishness on what the Indian business is doing was palpable. So your team is doing a fabulous job, Sanjeev, so kudos on that. I have one more question before we take that break. Your con call spoke about newer opportunities coming in, let's say from segments like chemicals. I believe for the export market, but maybe for India as well, because I hear commentary from the Indian chemical companies and they are fairly confident relative to what they have been. I would love to know, between the last time that we spoke, which was maybe 9 or 10 months ago, 11 months ago, and now, what sectors have sprung to life, which were maybe dormant?
So if I see the numbers, wherein I see the large numbers they are in the chemical, oil and gas, they are in the mining minerals area, data centers, water. Water is something which is kicking up quite well, and as the assurance of water supply to the masses as well as industry needs to be provided. I think that's one area, whether you kind of treat water and then you pump it back to the homes. That's another market segment. Power distribution, that's another area. So these are the few segments which were quite dominant in recent quarters. But as we go forward, we also see that the the so-called chemical is a very broad range. So you have a different spectrum. So if you draw the spectrum of the chemical, there are different industries which are becoming very sophisticated and also scaling up. So as the scaling up takes place, I think we are participating there.
I'm very intrigued by this very interesting machine that is out there, or a set of machines. Sanjeev, care to tell us what this is about? It looks fascinating.
Well, it's an epitome of automation and robotic automation application, and that's where it is very interesting for the customers who want precision manufacturing. So you can see here, it's a demonstration wherein 3 robots are being controlled by one single controller and doing a very precision movement across glasses. So this shows that coordinated steps can be taken to get the precision manufacturing. So it's just a demonstration of that.
But it's fascinating that the steel rod, or the metal rod, is not even touching any of those glasses. So precision is what you spoke about.
Precision and the repeatability. So what you can do is you run a process and you keep on repeating with the same accuracy. So that's what you get with robotics.
Wow, okay, fascinating. Clearly you are bullish on the robotics performance, Sanjeev, great. Okay, now we've spoken about the industries, end user industries. The other thing that really stood out for me was the kind of margin expansion that has happened, and it was almost a step up about 2 or 3 quarters ago, right? And you've continued that and you've extended that. Now, is this internal efficiencies, is this pricing power, is it raw material costs which have enabled you to almost cross teens now?
Yeah, so I think if you compare to last year, I think we have improved 500 basis points. As I said, this is not one thing, and this is not something which you do one quarter to the other. It is something, an equation in making for many quarters before that. So it has number of efficiencies calculated across the value chain. And so when we look at it, of course, easiest is the supply chain, wherein we have much more robust supply chain locally, because our ABB Group's philosophy is to be as resilient, as independent as possible, close to the market. So we have much more deeper supply chains in the country. So that means one is the availability of material is easy. Inventories you don't need to carry because the materials are available nearby. And at the same time, as you localize, you get a positive cost effect. So that also passes into your product cost, and that is on the supply chain side. And then apart from that, when you grow at 27% CAGR, and you have a higher capacity utilization, that also kicks in good amount of utilization of the facilities. So that also bodes well for the margin.
You are alluding to pricing power being fairly significant for you currently.
I'm saying that customers appreciate the technology and they are willing to pay for the technology that they get. Yeah.
Okay, and you reckon that there is an ability to be able to bump up pricing as CapEx comes to the fore and as the demand for some of the products actually goes higher?
So typically it's, there are 3 types of products we do. One is the MTO, MTS, which is made to stores, which is just a product which needs to be shipped out and somebody else does the value add. So that means we supply a product and most of the kind of value add is enjoyed by an integrator or some machine builder in the marketplace. Other is MTS, which is made to made to stores is the product, and then made to order is the one wherein we do some value add on the product before we ship it. So that's an area which is almost 60-65% of our business.
So therefore, is there ability to crank up pricing in the times to come with the demand?
I think the effect in the market will be more capacity utilization that we have. And
where are you there on the capacity utilization currently, roughly?
I think it's, some factories are running at 90%, some are at 85%. And given that some of them are running only 1 shift or 1.5 shifts, so we also have more room to grow. So we have estimated that for next 2 to 3 years we are good with the kind of projections we are seeing, and we have already put in place some announcements we made yesterday where we are expanding our capacities, and then also there are plans wherein we'll continue to expand those capacities. And given that we have this base established, we have to do only incremental investments to continue to cater to more. So we don't need to really set up very large greenfield capacities because we have enough land bank in our existing locations. We just continue to incrementally develop it. So more and more efficiencies come.
So am I getting this right? You are, so by the way, 27% CAGR over the last 3 years. I'm not asking for a specific number, but a robust number in the mid-20s is possible for the next 3 to 5?
I think the way the market is developing, and as I said, again, I take the example of China as a neighbor market. So there I see these numbers, these kind of growth numbers staying within in 20s and 30s for 4 or 5 years.
Okay.
So once the cycle kicks in, these growth cycles remain because we have to understand India has to build a lot of infrastructure.
Yeah.
India has to build a lot of housing. India has to build and expand a lot of manufacturing, which is just starting and kicking up, and that's where these products go. And also the cities are growing. Tier 2, Tier 3 cities are more aspirational. So once you put all those demand, I think hoping that those numbers stay is quite reasonable, unless something happens on the financial or economic side, which is something we cannot
Beyond our control, of course.
But otherwise, from the flow point of view, on the products, ETO, I think that looks very robust. And systems business, that typically is when the core sectors start making capex investments.
Okay, so whatever the number may be between 15 and 30, whatever the number is, I'm not quoting a number, but let's say a good number, a very healthy number, and current some shifts or some plants running at 85 to 90, you believe even if you clock in that mid-20s number, you don't have to do major incremental capex to be able to serve that kind of growth.
We have done simulations for next 10 years. So I think we have plans. Of course, at some point we will have to expand.
But not for the next 3 years.
But not so each business has a different condition. Some of the businesses which were relatively small, they have saturated. So that's where we have announced this new announcement. So next year we'll have that capacity available. And not only that they are expanding locally, but they also have the mandate to export because of geopolitical situation where more and more allocations are being given to us. So that also is expanding. So those things that we are doing immediately. But for each business, we already have the simulation for next 10 years, and we will continue to execute. And we have enough land bank available, and also we are a debt-free company. We have a reasonable amount of cash in our balance sheet, and I think we can serve it quite well.
5,000 crores, if I'm not wrong, or slightly more than that?
5,000 crores after we have paid out the interim dividend.
Wow. Okay. Now, before I talk about sustainability, because I was very impressed with that, but one more question therefore. A lot of people in the market cite the 2003 to 2008 capex cycle and say that what happens to EBITDA in the case of a capex upcycle is that there is a straight Jacob effect. We've seen signs of that already in your business. They also say that the nature of the current capex cycle is that companies which have got the technological moat are the ones which will benefit a lot more than every other company catering to capex. So I'm intrigued to ask you, is it possible that we've not seen the best of your margin performance? If the cycle continues for the next 5-7 years in the same strength that we have thus far, can margins go up even more from where they are right now?
So first part in terms of the how it will so as and when we continue to have the better utilization of our facilities as well as more localization and better spread, we will continue to see a downward the material cost. So like say you can see we used to be about 64-65% material cost. Last quarter we were at 57.3. So you can see a direct impact in terms of how our business mix is playing out. So projecting what the margins of the future will be, and I think it's very difficult. Agreed. Just like you do for the stock market. But I think what we know for sure is that participating in the market and going out to the deeper end of the market. And if you sustain your volumes, of course, it has a positive factor on the margins. Yeah.
Okay, yeah, so I was not asking for a number, but I'm guessing that this will not be the end of it. It could be higher as well.
So there are certain businesses which definitely needs to go up, and our global so-called mandate in the last kind of capital market day by our CEO was established, and we have new kind of a margin corridor, and India will have to contribute to that as well.
Okay, interesting. Now my final piece of today's conversation is around sustainability, because I was really impressed when I got to know that the water level of the plant or the area where we are in was much lower as a plate, and your efforts at ABB have helped the whole place, the whole village or town, as you may, the water level to come up. I was reading the annual report of 2023, and sustainability, landfill, waste to landfill, etc. On a lot of those things, you guys have made rapid strides. Speak a bit about that, but also layer it with one more thing, Sanjeev. A lot of companies do it because they want to, and a lot of companies then see economic benefits coming out of it as well, because investors don't mind paying a premium. I would love to know that as well. When you talk to investors, in global investors, are they willing to pay a premium to ABB India because of all of these factors as well? I'm not saying you are doing it for that, but does it come as a consequence?
It does, it does. So let's put it this way, what we do and why we do it. So as a global mandate, sustainability is something is really ingrained as a thought process in the management globally, and it's even more sustained and ingrained in our local management. What we want to do is why we want to do it is because it's the right thing to do. Like, we are a water stressed country, and if you are in a location, we have made a commitment that we want to run our units which are water positive. So this location is water positive to a scale of 1.25, which means we put 25% more water in the ground than we consume. And that's why you can see the water table on an electronic meter. It used to be 60 meters couple of years back, and now it has come to 28 and 28 meters at this point of time. It will continue to grow because specific investment and technology needs to be done. But not only water, even on the energy side, we are using 100% renewable energy, and of course we buy some certificates also to make sure our commitment is there. We don't use single-use plastic in our plants. The waste that goes to the landfill, we are very conscious of it. This plant is kind of a zero waste to landfill plant. So we don't send any waste to the landfill, and other locations are also converting into the same parameters. So this is something which we want to do consciously. We feel very proud, and you have to see the other effect is on the manpower. When they see that not only we do best in class technology product and we are doing well as a company, but we are very conscious in terms of how we take care of the environment around us. I think there's a motivation in employees. All our partners who visit us, they get impressed, and also our customers. Now, talking about the customers and the investors, especially the customers, it's an important element for them, because all the heavy engineering and heavy energy usage companies, whenever I go to them or my colleagues go to them, they are very sensitive to sustainability agenda because they want to implement it. And when you as a supplier speak the same language, they are very keen to participate and they want to align with us. One is how we do it and how they do it. We exchange information, and that's a good, apart from talking about weather, I think that's a very, very good point to talk about. That's a good icebreaker. And at the same time, all our companies like us, we want our suppliers also to participate to make sure that the scope 3 emissions are also reduced. Same way, our customers also have the targets to reduce their scope 3 emissions. So they are very keen and very clear that the companies who have these parameters already met, they are their preferred supplier. So what we are trying to do is, it makes sense for us. We want to be preferred suppliers in the eyes of our customers. I think that's what we aim for, and these are some of the elements which are dear to our customers and important for us. Yeah.
No, it's a fantastic plant, and lots to learn after visiting a plant which has not just got maybe first in class manufacturing abilities, or treatment abilities, but also best practices from the ESG perspective. Sanjeev, it's been a pleasure being here and talking to you about the ABB's business and about seeing the kind of plant setup that you have here. Thank you so much for having us.
Well, you're welcome, and thanks for visiting us again.
Yeah, I know, it's been an absolute delight being here. And viewers, I hope you found this episode and this program as useful about ABB India and about what's happening on the CapEx side for the country as I enjoyed doing it. Thanks for tuning in.